Hi everyone, I am Shantam Mehra and I'm co-founder at Tribe, and I look at the entire finance department and I handle the growth strategies and business models of Tribe. So first and foremost, it's more important to understand what is the model and the differentiating factor between the two. So the difference is that one is your existing fixed rent model, where any operator or any player could just take a building on rent, pay a fixed rent monthly or yearly or quarterly or whatever is decided between them. Moving on from that, they pay a fixed deposit, right? And that is how till today all the structuring has happened within this industry or any other rental industry or alternative real estate as we call it. We as Tribe have moved towards a more cohesive collaboration, which is called the operator model. This is typically more viable and has already been working in the mature industry of the hospitality industry. So that takes into account your entire hotel industry all over the world, where there is a sharing of revenue that happens between the landlord and the operator, which would be the hotel operator. In this case, it is us, the co-living operator, right? So when we come to the question of how much more can a landlord earn between the fixed rent model and the operator model with us, the answer typically what we've seen is about 30% more in the operator model, and that is because we see that within the sharing of revenue, when we hit 50% occupancy, because we're the highest in terms of revenue generation in the country. So when we hit 50% occupancy, a landlord typically hits their fixed rent expectation from the market, and any occupancy that we do above that is the additional earning for a landlord. So typically anyone can expect about 30% more than the market rent or the fixed rent model. So yeah, good follow-up question to the first one, and it ties in to the same concept, which is if a landlord can typically expect 30% more in terms of earning. See, all of this and everything what a landlord would be expecting comes down to earning. Right? That's why we do any and all sorts of businesses all across the world. So if a landlord is typically going to earn 30% more in terms of the revenue number as compared to the fixed rent, so they would be earning about 30% more in the yield as well. For a commercial property, existingly, we've done deals in fixed rent anywhere between 8 to 10% in terms of yield, and a landlord could well and truly earn about 20 to 30% more than that. So, pushing the 9.5, 10.5, close to 11% return on yield as well. And another very important point in this is that we do also look at residential properties in places like Mumbai, where commercial properties are tough to come by. So in residential properties, anything upwards of 6.5, 7%, where the market rate is about 2.5, 3% for a rental property. So that is something that we've been able to achieve. So absolutely not, and that is why we are professionals of this space, and that is why we exist. It's because end of the day we want landlords to earn more, right? And why we want to do that is because within the co-living industry and the student housing industry, because of the influx of COVID, we've seen that a lot of the landlords across the country have, had not the relevant earnings that they should have had from commercial properties. So that is why we come in and we want the landlords to earn more. So yeah, so keeping that into mind as well, we take care of the entire operational capabilities of running the facility, doing the sale, as well as managing the accounts. Right. So there is a platform that we have already created where all the MIS reports, revenue streams, landlord is the authoritative partner within the account as well, so they have complete control. But we take care of the entire payment side of the control, and that is to make sure that landlords can be anywhere in the world and make sure that the reports are being received to them, and they don't have to put in more than about 1 hour a week. So I think there's a very simple answer to this. Is that again tying up to all the conversation that we've had before? Is that earning, and earning. So we want to give a lot of upside to the landlord in terms of earning, and that is why it is beneficial for them. It is a new model within this industry, it's a very, very mature and well-defined model in different industries. So we only plugged it in over here to make sure that landlords earn more and there is more trust within the industry. There's more trust in Tribe as well. So that's why, end of the day, they make more money with us. What's more beneficial to them, right? So ready building, when we say in commercial terms, it would be something post warm shell, right? So warm shell is something that you would typically get an apartment that you move into, right? Where you only have to do interior fit outs. So in the real estate industry and the terms, it goes as from warm shell basis. Within 3 months, we can go live in a project. Typically, a landlord would invest about 1,500 rupees per square foot for the interior and movable interior capex. That is what a landlord would invest in terms of the monetary involvement in this, and the timeline would be 3 months to revenue. So within 3 months, we can go live and start generating revenue for Tribe as well as the landlord. Right. So there has been a massive influx of the fraction selling model within student housing and co-living alike. And fraction selling is typically where instead of selling the entire asset as a whole, you break down the asset into room wise or unit wise, and you sell individual units to multiple owners. So if we do discuss the terms where the entire asset is being sold as an entire entity, that's absolutely fine and works very, very well in the real estate industry in terms of an investment instrument as an entire portfolio. But when we talk about individual units being sold in the fraction model, that again we have multiple different ways to go about it. We do provide an MG with the revenue share and within the operator model as well. So that is typically a return that an individual investor could earn along with the entire upside that we do provide, which is 20-30% more than the fixed net. So there are multiple ways. We have multiple structuring patterns in which we do associate with the entire fractional ownership community as well. So yeah, definitely possible. Right. So we are growing very, very aggressively within this model, and we're going to do about 25,000 beds in the next 5 years. So we're looking at any and all partners within the real estate space to tie up